Hello and welcome there. You've tuned into a morning trade live here on Money Control. I'm Stacy Pereira, and here I am to help you navigate through this trading day, get you actionable trading strategies, sectoral trends, as well as most importantly your queries during the course of the show. So guys, do keep commenting on our live feed and we'll have them addressed by our guests on the show. But before we get to that and get them on board, let me get you all that we're getting from our global handover and what that's really looking like this morning. Well, if you look at Wall Street there, that one has closed the week lower as a rising treasury yields as well as concerns over interest rate hikes keep pressure on equities. Now, stocks in the Asia Pacific region too have opened with losses this morning, whereas the GIFT Nifty, that one is indicating just a mildly lower start for the Indian markets. Well, crude oil prices, those ones also closed slightly lower on Friday. Brent crude traded around $92 a barrel, even as Hamas releases a couple of American hostages, raising hopes of a de-escalation in West Asia. Meanwhile, gold continues to surge near $2,000 an ounce over safe haven buying as that war rages on. To banking earnings, where ICICI Bank delivered a very strong set of second quarter numbers, beating estimates on all fronts. Asset quality is at a 9-year high, while loan growth and deposit growth also at multi-quarter highs. Similarly, strong loan growth has driven profits for Kotak Bank as well. Their asset quality also remains quite stable, but the net interest margin, that one has declined more than expected for Kotak. And speaking of Kotak Mahindra Bank, the RBI has also approved Kotak Mahindra Bank's succession plan. Former Barclays Bank and Citigroup Asia CEO Ashok Vaswani is appointed as the new MD and CEO of the bank for a period of 3 years. And from the startup space, we have Honasa Consumers, the parent of Mama Earth, which plans an 1,700 crore rupee IPO on October 31st. Honasa Consumers was founded back in 2016 and became a unicorn when it raised about $52 million at a valuation of $1.2 billion, and this just in January 2022. Now Honasa aims to get to a valuation of about 1,500 crore rupees through this IPO. Well, we do have a lot to be looking forward to. It is a truncated, shortened weekend we have here, and we've seen the markets pretty much be under pressure. 3 consecutive days of losses that we saw while ending last week, but pretty much this is what is going to influence markets this week. We have a big Q2 earnings that we are looking forward to. When it comes to global trends, not much. We can see the fluctuation in crude oil prices that could influence markets as well. And additionally, investors will be looking at all the developments that are happening in the Middle East, and that is perhaps what is really going to be taking markets forward. So let's discuss this further, and joining me for that is Vinit Bolinjkar. He is the head of research at Ventura Securities. Good morning, Vinit, and thanks so much for giving us your time and speaking with us here at Money Control. Well, we have laid out what the situation is like. There are these geopolitical situations that could really change what market is looking at currently. So let's address that first, because for India at least, crude oil is that one factor that could really change the situation. And right now we are seeing some bit of moderation, Brent crude at that $92 per barrel. But what is your outlook, and do you think if there is a situation of de-escalation that it could go well then for Brent crude?
So, first things first is that the US has been able to convince the Israelis not to undertake a ground action because they fear conflagration of the issue. So, to that extent, we have seen some moderation in the price of oil, as well as, the markets in the morning trade ruling relatively firm. I expect that with these results coming out and very strong results, expect good morning buying to take place from here.
Vinit, what about the bond yields? And we've seen those surging for quite a bit in the US, almost touching that 5% last week. So is that really going to have any impact also on what we're going to see here in India?
See, the bond yields are surging, but I think they're peaking. And we have seen them, slightly fall off from those elevated levels over the last couple of days. And, that to me is a sign that, we are almost peaking out there. So considering those things, I think, we should be looking at taking a slightly contra trend and buying into the Indian markets.
Right, Vinit, let's also talk about a couple of stocks and ideas there. Now, over the weekend, in fact, on Friday, we did see 97 Communication, which is a parent of Paytm, and they came out with a robust set of numbers, we would say. In fact, a couple of brokerages have now spoken on them, and we are seeing Bernstein, which has given an outperform call for Paytm. In fact, also the target being raised to about 1,100 per share. We are seeing continued growth, quite stable Q2, we'd say, in terms of margins as well as them progress towards that profitability that Vijay Shekhar Sharma has been really talking about for so long, and that being the main focus of driver. Now, a lot of those numbers are quite promising when it comes to their revenue growth coming in at 60% on a YOY basis. Even the margins remaining quite good. The lending disbursal growth is almost close to 120%. So you're seeing those numbers which look promising. But when it comes to these new age tech stocks, there's a bit of, one must look at it with a pinch of salt, or there is that caveat that one wants to look at them. So how would you be looking at new age tech stocks, especially now, because we have seen a couple of numbers. We've seen Zomato, we are seeing Paytm also really deliver, or at least keep that focus on profitability. So what is your take on these new age tech stocks?
So definitely, while the growth is encouraging and expected from the tech stocks, the Zomatos and Paytms of the world, I believe that, digital lending and digital issuances are here. India is a very mature market as far as digital activity and digital economic activity is concerned. And we expect that this trend will only play out. So we are expecting very, very strong growth in terms of merchants, in terms of payments, as well as loan growth taking place. And their EBITDA numbers have been quite very, very, solid. And we think that the road to profitability in FY25 is well established. And it would be a very good time to get into this stock and, play the trend that is playing out. So, it's Paytm is akin to being a mini Bajaj Finance in its own right. And we believe that there is a lot of steam up here from here for the stock to deliver.
Right. So there's a lot of buzz in that NBFC space in general, but also on the negative side, a lot of caution where the RBI is also saying, there are too many, the unsecured loan portion is something that is seeing some huge trend, especially now getting into the festive season. That could be some bit of, caution that needs to be looked at there. Let me also bring in Rajesh Palviya, the head of research at Axis Securities this morning to give us a little bit of technical side of things. Good morning, Rajesh, and thanks so much for joining us. Let's understand one thing. We do have markets which are pretty much range bound at this point. At least that's what we saw all of last week, and likely to continue, because this week being a truncated one, there aren't that many big triggers that could really take the market ahead. So a little bit more of pressure. But what are the charts really suggesting at this point, both for the Nifty as well as Bank Nifty at this time?
So good morning, Stacy. So in the previous session, we have seen that, long unwinding was there for both the indices. Nifty and Bank Nifty has witnessed long unwinding action. Nifty is now trading near to its very critical support area of 19,500. If at all Nifty has to show some pullback, then this level needs to be defended by the market, and then we can see some pullback action from current level. If we breaks below 19,500, then possibly we can see furthermore continuation of supply pressure, and then Nifty can again retest the level of around 19,300, 350 zone also. So that's the setup as of now for the Nifty. So 19,500 is very important for today's session. How the market opens will decide the fresh course of direction from here onward. On the higher side, 19,600, 650 are likely to act as an immediate supply zone, as the most call writers have shifted again their position at 19,700, 19,600 strikes. So that concentration is clearly suggesting that, for any minor pullback will attract the supply pressure on higher side. So 19,500 and 19,650 is the immediate level one needs to watch for in next couple of trading session. For Bank Nifty, again, Bank Nifty has slipped below to 44,000 level. That is again, the major put base concentration in the previous weekend that we have broken in the previous week on the weekly closing basis. So looking at the setup for Bank Nifty, if it continues to trade below 44,000 level, then possibly further more pressure we can see towards 44,500, 400, 43,000. 500, 43,400 zone. So that's the next level on the downside for Bank Nifty. Until the Bank Nifty not crosses above 44,200, 44,300, there won't be any short covering will play out in the market. So till these levels are intact, sell on rise is the strategy for Bank Nifty.
Right. In fact, Rajesh, do stay on with us because we are going to see quite a bit of action in the banking space. That's because over the weekend on Saturday, we saw the big banks, private banks actually put out their Q2 numbers. And if I have to take you through some of them, well, we did see ICICI Bank, which really put out 36% or so on a year-on-year growth in its standalone profits, which came in at 10,261 crore rupees. Now, this was mostly driven by that sharp fall that we saw in the provisions. Even the asset quality has gone on to improve on a sequential basis, whereas their net interest income for the quarter has come in at 18,308 crore rupees. This is an increase of about 23.8% on a year-on-year basis, whereas their net interest margins, that one has risen by about 22 basis points on a YOY basis, 4.53% increase. Now, if you look at Kotak Mahindra in the same way, that the private lender too has recorded a good, robust growth, 24% on a year-on-year basis on a standalone profit. If you have to look at coming in at 3,191 crore rupees, whereas if you look at the operating profit, that one growing almost 29%, coming in at 4,610 crore rupees. Even the asset quality number there too, looking quite good and stable. Net interest income has come in increased by about 23%. So all in all, pretty good numbers. I think the only caveat for Kotak Bank was, some bit of pressure that it saw on the lending side of things, where we did have a slew of other banks also that came out with numbers like Yes Bank, IDBI, as well as RBL. So all of those smaller banks also seeing at least their asset quality for one coming in at, multi-year highs. So let's look at the banking space. Let me go back to Vinit, in fact, and get his sense of how the Indian banking space, and especially after their Q2 numbers, banks in fact have always been performing quite well. Even in this whole rally that we've seen, they've been the performers that are taking things higher or lower. So we saw HDFC last week, now ICICI, Kotak, all of them also coming with a good set of Q2 numbers. So how is one to be looking at the banking space at this point?
So, there are three things to understand is that the asset quality continues to remain robust, number one. Number two is that the credit growth is very awesome. And with this quarter being the festive season is expected to continue to be strong, and their NIMs have compressed primarily to a certain and to a large extent, and that is going to be a trend that is going to play out over the next couple of quarters. So, given these things, we believe that ICICI Bank has seen some fantastic numbers. In the case of Kotak, I believe that the street would want to take cognizance of how the new appointed MD and his philosophy works, and how the bank performs under him. So I think that among the top banks that we just spoke about, I think ICICI Bank is an outlier in terms of performance and warrants a strong buy.
Right. Well, Vinit, also let me bring Rajesh now at this point to get his sense of the banking space, because a lot of queries are coming in there on how one should be looking at these banking stocks at this point. So, Rajesh, are the charts really saying that there could be further upside from here, or should one really look at some bit of caution, since we are in, if it comes to the how RBI has acted and how the Fed has acted, should one really be a little bit more cautious when it comes to banking names?
So it's a mixed kind of behavior in most of the private bank at this juncture. Some of the banks are still trading above their breakout levels, and some banks are now trading near to their important support area. If we talk about ICICI Bank, it's almost trading near to its 200-day moving average, that is at around 920 kind of level. So it's just 1%, 1.5% away from the current market price. So if at all ICICI Bank manages to hold this 920 level, then some pullback action we can see in ICICI Bank towards 945, 960 zone. That is the again supply zone on the higher side. Though we have seen significant profit taking in the stock in last couple of months, so I think it will take some time to recover from these level. So 920 is the critical level to watch for. If it slips below to 920, then possibly it may continue furthermore downward trend towards 880 zone. That's the next major support area. Even if we talk about Kotak Bank, stock has shown some recovery from its recent low. This is the third week where we are seeing some kind of buying action in the stock from lower level. But still, if we analyze the near-term, short-term setup, stock is still in the bearish trend. 1780, 1790 is the immediate supply zone on the near-term chart. Until the stock not crosses 1790 zone, it may remain under pressure. Once it crosses those levels, some short covering action we can see in Kotak Bank towards 1840, 1860 zone. So that's the level where we can see Kotak Bank on the higher side. But on the downside, one should keep their stop loss at around 1720, because it's very important and critical support area on the downside. But from private space, IndusInd Bank is looking very promising. Stock is continuously showing buying interest. Stock is sustaining about to its near-term, short-term breakout level. So I think IndusInd Bank may show some outperformance from the private space, and we may see furthermore rally towards 1500 to 1530 level in the continuation of this uptrend. So one can look at the IndusInd Bank to buy with stop loss of 1430.
Well, that was Rajesh's view on private banks. IndusInd is what he's liking. But let's get in a couple of queries that are coming in now. Brijesh Agarwal, Rajesh wants to know your view on Gujarat Gas. That's also because last week we did see a lot of action in IGL after, that Delhi EV report that came out. So, and big cuts coming in there for IGL. But he wants to know your view on Gujarat Gas and how that is going to play out, and what could be the factors that one should be looking out for when it comes to these gas distribution stocks.
Yeah, definitely due to this fleet operators EV shift is definitely directly giving a hit on the business of IGL, Gujarat Gas, MGL all. And we have seen a significant supply pressure in IGL in the last week. The same peer company, Gujarat Gas, is also facing the same supply pressure, and now stock is almost trading near to its swing low of June 2022. So I think stock is in bearish trend. Series of lower top, lower bottom formation is taking place. If at all stocks breaks below 400 and level, then possibly it may continue furthermore downside and towards 365 or 370 zone also. So I think one should avoid at this juncture. Don't buy this stock at this level. I think let the selling pressure to settle down at certain point, then one should look at to buy Gujarat Gas, as immediate near-term, short-term trend is on the bearish side. So we may see furthermore downside towards 370, 365 zone.
Right. Rajesh, also we have a slew of pharma earnings in this coming week also. Cipla, Dr. Reddy's, all of them will be putting out their numbers. But we have a query that's coming in from Som KM, and he wants your view on Glenmark Life Sciences. Now, this is part of that, and we did see a lot of action there where the parent company really taking in that stake. So how is one to be looking at Glenmark Life Sciences right now? A stock, at least for now, is not doing too well here.
Yeah. So we have seen again, mixed behavior in the most of the pharma space. And if you talk about Glenmark Life Science, so stock is consolidating since last couple of week in very tight range. The consolidation range for the stock is around 600 to 660 is the consolidation range in last almost 7-8 weeks. So either side breakout will decide the fresh direction for the stock. Though stock is holding about to its 100-day moving average, so some ray of hope towards the recovery in the stock from current level. So if you are already bought the stock and holding this position, your stop loss should be at around 605. If this stock's not taken out, then I think some pullback action can be there towards 645, 660. The final breakout will come above 660, and then possibly after that breakout, the stock may show some decent rally towards 720, 740. So.
Right, and while we're speaking of pharma, one stock that is on my radar is that of IPCA Laboratories. Now this because the manufacturing facility of IPCA in Ratlam in Madhya Pradesh has received that establishment inspection report from the US Food and Drug Administration, or the US FDA, and they've classified them as voluntary action indicated, or VAI as it goes in pharma parlance. Now the said facility is considered to be in minimal acceptable state of compliance, and this is with regard to their current good manufacturing practices, or CGMP as it's known. Now, the US health regulators also concluded that inspection at the Ratlam facility, which took place during June 5th to 13th. Now we have seen IPCA Laboratories also see some bit of swings when back in June when there were reports of this inspection taking place, but since then there has been some some bit of correction that we are seeing on the stock. But now with this news saying that there is voluntary action required, well, it would change some bit for the pharma space. In fact, we've seen a couple of pharma stocks have either get approval from the US FDA or further inspections that have come out over a period of time. So let me finally bring in Vinit again to ask him his view on pharma stocks and how one should be looking at that space at this point, because a lot of consolidation, a lot of M&A action that we're getting to hear of, at least when it comes to Cipla and the others. So how is one to be looking at pharma really?
So I think pharma is definitely a safe haven currently to buy in the current investment horizon. Notably, given the fact that defensive stocks like IT stocks are facing the brunt of slowdown in spending, but pharma is one given which is going to face some steady growth coming through. And to my mind, this is one sector where investors should be adding stocks, and that's how you should be playing the sector.
Right. So that is the pharma space right now looking quite safe. Let's also get in a couple more queries answered by Rajesh. We have a view from Pooja asking your view on L&T. We also had a couple of infra names that gave out their results over the weekend. JSW Steel, JSW Energy, all of these in the energy and infra space. So, but L&T is that big name that we look forward to even when it comes to earnings. So Pooja wants to know your view on L&T.
Overall, long-term structure for L&T is on the bullish side, but yes, some profit taking is happening in line with the market correction. And I think in last week, we have seen a significant supply pressure. Almost stock has corrected 2.5% in the last week. Looking at the near-term setup, long-term setup, we do have a bullish view on the stock. If you get any opportunity to buy this stock towards 29.60, 29.40, then it's again, buying opportunity to buy this stock in corrective move, because overall structure is bullish. Once the market settle down at a certain point, and in the recovery, this stock may continue outperformance. And then we have a target of 3,200 to 3,300 in a short to medium term basis. So I think buy on dip should be your strategy in L&T. It's a good quality stock. If you get any opportunity in decline, you can buy and accumulate this stock.
Right, fine. Rajesh, before we let you go, we'd also want our viewers to know what stocks are on your radar and your picks that you'd want to give our viewers this Monday morning.
So, Stacy, we are moving now towards the expiry week, and a lot of volatility is going to play out. But some of the stocks are still outperforming and showing strength. So, one stock that we like from two-wheeler space, that is Bajaj Auto, very strong momentum in last week, and stock has given a breakout of its multiple supply zone and almost now enjoying all-time high trajectory. We expect that Bajaj Auto can continue furthermore upside, and we are projecting target of 55.70, 55.80 in the continuation of this up move. One can buy Bajaj Auto with stop loss of 54.30. The other stock that we like is MTAR Tech. Very strong chart and very strong price action in last couple of trading session. Looking at the daily chart, we expect that this breakout may take a stock further higher towards 2800 or 2820 level in the continuation of this up move. So MTAR Tech one can buy with stop loss of 2700. So these two stocks one can look at to buy in this kind of volatile market.
Well, thanks so much, Rajesh, for giving us those picks. Let me also thank Vinit Bolinkar from Ventura Securities for joining us this morning. Both of these gentlemen did help us get a perspective on how we should be looking at this trading week, although it is a truncated one. Well, with that, that's all we have on this edition of Morning Trade. Do stay tuned to Money Control, for coming up next is Opening Bell.